So to start with, I'm going to introduce you to our judges, and I will ask the judges to come up one by one as I call your name. Okay? Our first judge is Deon Woods Bell. Give her a clap. Deon is a senior advisor for global policy at the Bill and Melinda Gates Foundation on the Financial Services for the Poor team. Her focus includes advancing harmonization of cross-border laws and policies and enabling environments for women's economic power. Welcome, Deon. Our next judge is Ramakrishnan, also known as Ramki Gopalan, who's a chief product officer at Visa Inc. for India and South Asia. Ramki is the chief product officer, and as part of his role, he's constantly looking for new payment opportunities and works very closely with fintechs throughout the landscape. Hand of applause for Ramki. Our next judge is Pat Patel, Executive Director of Elevandi. Elevandi is an organization spun out of the Monetary Authority of Singapore, whose mission is to bring public and private sectors together through a number of convening platforms. Elevandi provides opportunities for policymakers and regulators from all jurisdictions to connect with the industry. Please welcome Pat Patel. Our next judge is Rupal Patil. Rupal is a partner in the asset management practice within EY's Financial Services Office in New York. She also manages EY's global delivery services across all service lines. Please welcome Rupal. Our next judge is David Shrier, who is a professor of practice, and I had to learn yesterday what that meant, at the Imperial College Business School in London. David created MIT and Oxford's fintech and blockchain classes and has both entrepreneurial and venture capital investing experience. He was central to the creation of Women World's Banking Leadership and Diversity for Regulators program held in partnership with Oxford University. Welcome, David. And our last judge is a lady we all know, Mary Ellen Iskenderian, who's the president and CEO of Women's World Banking, the global nonprofit dedicated to giving low-income women in the developing world access to financial tools and resources they require to achieve security and prosperity. Thank you, judges. I will welcome back our finalists for the competition. Our first one being Martyna Malinowska, founder and chief product officer of GajiGesa. If you hadn't gotten it yet, GajiGesa is a female-founded and the largest employee benefit and productivity platform in Southeast Asia. GajiGesa seeks to empower low-income employees, especially women, to resolve financial stress through earned wage access and other add-on financial wellness services embedded in a holistic one-stop solution for employees and employers. Welcome back, Martyna.
Thank you. A short while, I wanted to take you out of this beautiful place and take you to Indonesia. And I wanted you to meet Ayu. Ayu is a 32-year-old weaver in garment factory in Tier 2 city in Indonesia. She earns less than $300 per month. She doesn't have any savings and has not done her financial planning. She doesn't have a financial history and a credit score. And during COVID, when she was forced to borrow from a loan shark to cover her son's unexpected medical expense. Since then, she's been trapped in a cycle of high interest borrowing. It has affected her productivity at work due to financial stress. And her employer doesn't provide her with any benefits, such as insurance or employee loans. In the end, Ayu, haunted by the loan shark, decides to leave the workplace. But Ayu is not the only one. There are 134 million salaried employees in Indonesia and 450,000 medium large sized businesses, which employ 80% of workforce classified as working poor. These are the individuals which are troubled by the financial stress, which is quoted as the main reason for the lower engagement at work. In GajiGesa, we believe that the employee should not only have a salary but also own it. Our mission is to help millions of working poor in Southeast Asia to achieve financial wellness by taking full control of their wages. GajiGesa is a financial benefits platform which, in collaboration with employer, enables employee real-time access to their wages before payday. But please do not confuse it with a loan. These are wages which are based on their productivity at work, such as finished day at work, shift, or project. And they are actually being owned by employer to be paid to the employee. These wages are made available real time on the application or a chatbot and can be accessed with a push of a button from their mobile device upon a small fee, which can be borne by employer or employee. But GajiGesa is not only about accessing the wage and cashing it out to the wallet or bank account. There are other products and services employee can use, and they can use the balance which they earn to pay for their bills, to buy the vouchers, pay for religious donation, buy micro insurance, or transfer money to family and friends in other cities. Last but not least, we also offer financial education in digital and offline settings. Our Today we have three go-to-market strategies. We work with senior business influencers. We also deploy our sales workforce on the ground, and we work with channel partners and we embed our service as a part of their platform offering. Today, we serve more than 230 employers, and we have more than 200,000 employees in our ecosystem, and we are looking at exponential growth by the end of 2025. But it's not only about just last slide, sorry. It's not only about it's not only about collecting business data, but we also create impact for our users. Today, based on so in Indonesia, 39% of workforce women account for 39% workforce, and in GajiGesa, 50% of our user base are women. And to date, based on our data, we have saved them $11 million in predatory loan fees. They're also more active users who, on average, access more than 30% of their wage through our platform. And we are very happy to share that we also managed to increase their savings and improve their financial resilience. A bit about our team, well-diverse team, a bit about founding team, and I'm sorry, over time.
Thank you, Martyna.
What is your repeat utilization rate?
Right.
So
Yeah.
how many of your clients are coming back?
Yeah, understand. So today, actually, our model is a B2B2C, and our retention rates, which if we measure it over a period of 12 months, month on month, is more than 80%. And the median transaction amount is median transaction number is 3 to 4 times.
Have you had instances where that the employers, so you mainly work with the employers or employees in terms of how it works with the wage, and have you had instances where you've had any sorts of failures from the employers, whereby you have given out to the employees and or the women and you haven't received the money?
Oh, okay. So yeah, our model is B2B2C. So we sell to employers and we deploy our capital, which can be accessed by employee, and we collect it at the end of the day from the salary. So we depend heavily on employer. If there is any risk we bear today, it's actually employer risk. So our loss ratio to date, live to date, is 0.2%, and we disbursed more than $70 million to date in earned wages. And these losses actually mostly come from the SME segment. So we experimented a lot to understand who should be our target audience in terms of employer. So the SMEs turned out to be a bit more risky, and there was a bit more interest in just capital from employer perspective rather than wellness and productivity or retention.
Congratulations so far on your journey. It's definitely not easy getting up on stage and pitching, so props to you. Yeah, you talk about exponential growth. You've got this kind of a 3-year or between 2023 and 2025. What are the 1 or 2 key things that leads you to believe that there will be this exponential growth?
Yeah, so let me share with you a bit about the acquisition first. So today we are present in four cities, tier 1, tier 2 in Indonesia. We are looking to be in more than 20 cities by the end of this year. and we are looking to enter another market next year. Now, for us, what is important is a capital. So if you saw the different type of strategies we currently follow to acquire our employers, it's a mix between deploying our capital as well as having channel partners who actually use our fully white label technology, or even employers putting their own capital for us to disburse. So I think for us, crucial is capital, as well as further mastering the art of acquiring bigger and bigger enterprise employers.
And sorry, just one follow-on question. Sorry. And if there is a further downturn in the region, how will that impact your business?
So Indonesia is a huge market. So we really want to first focus on Indonesia. And if we are going to another market, we would need to deploy our sales workforce ground up and build an acquisition channels, or potentially start in the ecosystem and through different partnerships. So it's definitely a risk for the focus. So we want to make sure we are first successful in Indonesia, and at least we reach the numbers which we set as our targets by the end of the year to think more about the other market.
Have you ever considered regulations as a risk to this business? Regulations from Indonesian market, if to add to what Pat was saying, if the cost at which you borrow goes up because it's going to be a downturn, and the regulator clamps down the market to say you cannot charge and pass on this to the customers, do you think that squeeze will impact you?
Okay, so I think there are two kind of aspects in terms of regulations. In terms of the interest rates, we are currently figuring out how do we adjust our pricing to be able to account for the rising interest rates pressures. And secondly, in terms of overall regulatory requirements as such, so today we are part of AFTEC, which is actually kind of a roundtable of fintechs working with regulator on figuring out how to eradicate predatory lending in Indonesia, and we are actively having dialogue with them to understand like how we can use technology to be able to help the poor with responsible financial services. So we are actively participating in discussions, and potentially if our model, which is today not regulated, is regulated, would like to take active part in working with regulators of what it should look like.
Thank you.
I think you can change. There's a soft part of it that you're driving through this. Maybe it's change of behavior. Maybe it's trying to instill savings, etc. That comes as part of it. Getting them more financially savvy in terms of alongside that. Is that like something that you're gonna? Is that something that you're looking or measuring as a soft part of this?
Just to make sure I understood your question, we are talking about ensuring that we improve financial savviness of our users.
Or basically having it, basically enforce patterns, say maybe if they are not savings, and this is the way they'll realize that, hey, maybe there's a percentage of this pay that needs to go towards my savings. So that's a whole different advantage that you can drive through this.
Yes, so it actually kind of brings me a bit to value proposition to women, because when we started, our core product was just cash out your money to selected bank account or wallet. But then we built these different financial products on the top of it, which enable women to take control of their wages even before these wages reach their bank account, and they give them full control over it. They don't have to cash it out, they can redistribute it. And our North Star, we kind of redefined the North Star for a while, but now we are looking really at percentage of utilization of the wage on our platform. And through all these different products and services, we are improving the utilization, and we believe that finance should be easy. So the next step for us is to be this everyday financial app for the employees, where we can take active control of their wages and actually help them to save, invest, and spend it wisely.
You said you have an ambition to grow from 4 cities to 20 and then other markets. Do you have the team experience and skills, geographic footprint to make that happen?
Yes, so I worked across the region in Southeast Asia for nearly 5 years on the ground, working with underprivileged borrowers. And my co-founder worked in Stripe and Uber, and he held leadership positions there. Also, our country head today, who is also a head of our operations, actually has experience growing market, growing growing the business for different tech companies, foreign tech companies in Indonesia. In terms of further expansion, it will definitely require us to build a team on the ground. So I think this is very important because every market is very specific. This is what we learn, right? In terms of regulations, in terms of users, in terms of partnerships. So this we would have to hire the right team as well to further support our growth in these markets.
Capital raise would you be looking for to achieve the growth that you talked about? And describe who or the profile of the perfect investor or set of investors for that capital raise.
Yes. So today we are disbursing on an annualized basis $60 million. And we have currently an active line with different debt providers of $8 million. And this is also a bit of a mix of our equity. So really to achieve that exponential growth, we are looking at much higher capital raise. But what is very important for us is that we want to make sure that the capital doesn't really always come from our book. And we are looking for different channel partners which actually allow us to use their own capital for these disbursements because the capital requirement obviously is very high. Now, in terms of the profile, currently we work with banks and private lenders. And of course, the bank rates are much more accessible and also allow us to offer products at a lower interest rate. So we'll be looking at that sort of partnership at more responsible lenders who are looking at other indicators, not only on the revenues, but also social impact, which you really create on the ground.
All right, 3 minutes left, judges. 3 more minutes.
Just one question around runway. How long is your runway? And if things change, what contingencies do you have in place?
So our runway today is more than 2 years. We actually recently also closed a round. So I am very proud to share that over the last 6 months, we actually managed to grow our revenues by 6 times. And also we reduced our burn rate. I think our principle is to ensure that we invest in technology which allow us to make our entire operation cheaper and more transparent. And make sure that we, of course, look out for the runway and when do we need to potentially reduce our experiments. And we do a lot of experiments. So I think this is what we are also looking at. We analyze the runway and the opportunity to continue experimenting and growing the revenues alongside.
That's amazing. 2 years runway is fantastic. Congratulations.
All right. Since we have no more questions, thank you very much, Martyna. Round of applause. Well done. Well done, Martyna. Our next contestant, our next finalist is Neha Juneja, who's the co-founder and CEO of India P2P, which is a female-founded technology platform that is disrupting the credit market in India. It is committed to addressing the persistent biases that women seeking credit face by lowering the cost of capital and directly connecting individual investors to women, microfinance, and small business owners. Neha, please join us. You have 5 minutes for your pitch, and the judges have 13 minutes to ask you questions. Good luck.
Thank you. Thank you. And thank you for having me today. I want to start quickly by sharing how the thesis for India P2P came about. Before India P2P and after my 2008 F&O venture, I co-founded and ran Greenway, which is a social impact enterprise that focuses on providing clean cooking solutions to rural households. And over the past 12 years, we built a user base of over 10 million users, most of them rural women, because cooking, unfortunately, still continues to be a gendered activity. We gave a successful exit to our VC investors and came about to doing India P2P today. Building on the thesis that poverty, we met almost all of our consumers were either very low income or low income, and they kind of, in spite of working so hard, I always felt so much more harder than what I worked or most of us work, continue to stay in the trap of poverty because they had no ways to leverage their time and effort. One easy way to leverage your time and effort is to have access to capital that lets you have a greater outcome with the same time and effort that you put in. And we saw with microfinance and other lending movements to women that, yes, this was really making a difference. It's a pathway from poverty to prosperity. And we also discovered at one point, quite like as financiers, so to say, that women were the most efficient deployers of capital. At one point, we started financing $40 cook stoves. We financed first, 60 of them, and then 600,000 of them, and then many, many more, and realized that, yeah, the money was coming back in spite of inefficient collection systems and other discrepancies that we had within the organization, the money would come back, which led us to the thesis that, yes, this is a segment, whether they've been financed before or not, women are the most responsible repairs, which is also one of the reasons women have more responsibility because they're more responsible in general. So, so we are here on a mission to unlock new capital for 100 million women-owned businesses. And why I say unlock more capital is that in spite of what microfinance and other movements have proven, this segment still continues to be credit starved. And one of the reasons, the primary reason women borrowers, in spite of being such a great asset class with defaults less than 2% and interest payouts of about 25%, continue to be credit starved is that investors, institutional and retail investors sitting on upwards of $1 trillion worth of capital earn less than 5% of what the segment generates. A large part of the yield is actually leaked out to capital distribution intermediaries like banks and wholesale NBFCs, who essentially act as capital distributors or bulk breakers. They have the ability to raise capital from investors, especially retail investors, but not the wherewithal or the desire to give out small loans to the borrower segment, to this best borrower segment that we have in our economy. India P2P fixes this by having the industry's first unified tech stack that sources loans from women borrowers, often in partnership with last mile NBFCs, creates diversified debt products out of those loans. So an investor can come on India P2P, invest as little as $60, and even though $60 would be split across 10 loan fractions coming from different parts of the country, different income sources of the borrower, and diversified along 8 such parameters to create a truly granularly risk diversified product. And of course, we are able to do different levels of securitization on the product and do further de-risking as well. I will not go into the details of that since this is only 5 minutes. But we've been in operations for about 15 months now. And in the last 15 months, India P2P is India's best performing investment product out there, having delivered upwards of 16% returns to investors, having unlocked $4 million worth of capital for our borrowers. And over the next 12 months, we aim to unlock another $35 million worth of disbursements for our borrowers. These are just some examples of some of the India P2P borrowers, and I'll stop here for questions now.
Maybe I'll start with this. As you know, rate of returns on fixed deposits and things like this is increasing. Do you find it tougher going to attract your customers to start lending to these kind of?
So this is, I think, anything that we are offering about 15-16% returns. 16% when it's compounded over any year. I think any return which is around 14% plus is not seen in the economy. That is attractive enough. The challenge we faced initially, especially early on, was to build awareness about how this is a great asset class. We have investors who otherwise invest in the stock markets or mutual funds. They've never even considered this asset class to invest in, especially as a debt product. And the second challenge has been that the entity who's asking you to make this investment has no history, which is us, and we're kind of still building out that vintage behind us.
Good. I'll go with one more. Did you, the 10 million customers from your prior venture, did you use them for your next venture? Did you?
Of course, the same client base in many ways, and needless to say, it's
excellent. Thank you.
What is the marketing strategy to attract those investors?
Yes, so in one of the things that attracts investors is that this is I want to clarify that the entire risk of the product, this investment is indeed on the investor. So a lot of investors are definitely very excited by the yields that the segment um, gives. And our strategy is simply to build awareness about women as borrowers. Right now, about 97% of our portfolio is allocated towards women. And the investors who have invested in the segment, sometimes they see some male names as to where their money has gone, and they'll call back and complain and say, is there a mistake? And we say, no, no, they're also good borrowers. But fundamentally, it's through building awareness about the fact that women, over the past, at least the microfinance movement has proved that this is proven that this is pretty much the best asset class, which I keep repeating. And I can argue that at length, across.
Do you have a strategy to attack the bias in the market? You often refer to women being the best in class, but how do you prepare to attack that issue?
So we are, first of all, a completely bias-free lending product. We don't need an NOC. We don't score you less if you're a woman. And of course, we are focused on enabling more women to come and apply for an India P2P loan. And one of the ways of doing that is, of course, having agent networks that are predominantly women. So we have agents who go out in the field and do certain diligence on the borrower and collect underwriting data as well. And about 71% of those agents are women, which I think just having more women in the room makes it comfortable for more women to be in that room. So that is pretty much the essence of the strategy. But as a business, I sell women borrowers as an asset class, so I have no choice but to not have any bias and keep attracting women borrowers.
In terms of your investors, what do you see in terms of percentages women versus men? Are you tracking that?
So we do track that. We don't have very hard data on it, but less than 10% of our investors are women. And that's a problem with the Indian economy. And I'll be upfront, that is not a problem we are tackling right now, because at this stage of the business, I just need more capital to come in and investors to come in. But I would say that even 10%, it is 10%. We would like that to be increased, to go up. But the product is, on the other hand, it's a completely commercial product. People don't invest in India P2P for as much as the impact. I ran an impact business before, and I know people make lesser allocations to impact than on earnings. So this is a positioned as an earnings product. But right now, about 10%.
How do you do the tracking of all these? Because such small investments and then even smaller loans and debts, right? So all this tracking of and paying interest and yields, etc. How is that and what's that force looks like?
I'll quickly explain the product. So the technology stack is effectively like a banking stack, except for the savings part of it. And at no point in time do we take custody of the capital. So as soon it's completely digitized, as soon as a borrower or a lender on the platform completes their KYC, which is just submitting your ID, with our banking integrations, we in real time create an escrow account for them. So their money stays in their own escrow. So if I am a lender, it is in Neha Juneja's escrow, or I'm a borrower, the repayments flow through my escrow. And the breaking down of the loan into fractions and the breaking down of the investments from escrow to escrow is completely digitized, almost real time, fully. I mean, you have very advanced data systems today to manage that. And that's how we do it. I would, in fact, go out and say that this is the industry's most intelligent debt investment stack. In fact, one of our ideas also is in the future to target institutional investors by doing instrument issuances based on the same tech stack. So you could have an India P2P NCD out in the market, which is composed of so many diversified loans coming from different sources. And this NCD would give you a delta of at least 400 basis points or thereabouts, which would be a great market maker. But I went and did a little pitch instead of answering the question straight. But it's a very elaborate technology stack. At no point is there any human manual intervention to manage the money at all. And since we are just a platform, we don't operate our own book. We are just a technology provider or a technology layer on top.
What's your headcount, burn rate, and what's your break-even point?
So we are 21 people on payroll. We burn about $20,000 a month at the moment. The expenses are higher, but we are also revenue positive because we do lending on one side, which does generate revenues. And the idea is to do about $100 million of disbursements within the next 30 months. So to grow 5x, 5.5x year on year.
So, and your revenue this year, and what's your break-even point?
So our revenue right now would be about $380,000. That's roughly a little under 10% of the disbursements that we have done. So we take some revenue from lenders and some from borrowers, of course, and we would break even at disbursement levels of about $22 million.
Yeah. What are your congratulations as well? Great journey, a great entrepreneurial experience as well. What are your top two risks, and how are you managing those over the coming year?
So one of the biggest, so we are a regulated product and we do have the regulatory licenses. So that being aside, one of the biggest risks is poor underwriting or something going wrong on the underwriting side, because the moment there are high NPAs on the platform, right now we do have some level of less than 1% NPAs. The moment they go to a higher number, the capital flow will stop, because these are retail investors are very quick to react to any change in returns. So that is one, maintaining that quality of underwriting and maintaining that quality of diversification becomes important. The other is, of course, any event like we had demonetization or COVID will impact repayments. There is, in fact, the reason we diversify geographically also is because in low income markets, if there's a cyclone in one part of the country, repayments, you cannot enforce repayments during that time from those borrowers. So that risk persists. Some of it is managed through diversification, but any economy-wide risk would be a big risk to the business.
And who manages the underwriting side within the business, and how do you keep that refreshed? Because I think a lot of businesses in the world today have risk management frameworks that are fit for purpose for yesterday and the day before, but not necessarily today and tomorrow and the day after, as we've seen in the US clearly. How are you managing that underwriting?
So what happens in the microfinance segment is that there is no unique underwriting on a borrower. It's very broad, prior performance or social underwriting. We are the first enterprise to underwrite the woman borrower for her livelihood. So what we do is that we do some underwriting based on her past credit performance, if there is any. And we do have agents who do a place of work visit and a business assessment. Whether you have 2 business lines or 3 business lines, it doesn't matter, because most families here have multiple income lines, to do a business assessment on site. So right now it's an operationally intense activity for us, but it's helping us build a credit model, which you said would be a little more looking into the future in terms of businesses than what it is right now. And uh, this underwriting is based on about 600 data points that are collected, of which at least about 150 to 180 would be unique data points to India P2P on basis this in-person visit that is made.
What is your runway?
So we have about 15 months, and I am hoping to break even before those 15 months. But we do intend raising more capital just to accelerate this journey, accelerate the pace of growth, and also get to the stage where we are able to do these instrument issuances, where each issuance can be $10 million, $20 million, one go.
Awesome.
We should all invest. All Indian nationals should invest. It is the best performing investment product out there.
All right. If we don't have any more questions, I think we give Neha a big round of applause. Well done. And we wish you luck. Wish you luck. Thank you, Neha.
Yes.
Of your investment. So what's the
Ah.
Since you're
So-
asking everybody
Yes.
should know what is the minimum that they can open up.
So you need to be an Indian national to invest. If you're not, please tell all your Indian friends. So you can invest as little as $60 and up to about $40,000, which is the regulatory limit right now. So it's a product which is designed for even by regulation for retail investors.
Sorry.
Thank you. Okay. So next is Gabe Ruhan, the CEO of Paycode, which is a Paycode's groundbreaking technology combines biometric, digital identity, and affordable access to basic financial services to tackle the barriers of lack of identity, low connectivity, and high cost. It brings financial inclusion and digital data to the unbanked last mile in Africa with a strong focus on women. Gabe, you have 5 minutes for your pitch, and judges, you have 13 minutes to ask him all the questions that you need.
Good afternoon, judges. Paycode's a smart card-based payment switching and settlement system that's targeted at the unbanked and underserved, particularly in rural and semi-rural locations where other digital platforms don't instill a level of confidence, or as we like to say, banking under the mango tree. So the problem is across the world that millions of people don't have access, particularly women, don't have access to financial services. And that's primarily down to three main reasons. They don't have a formal identity, they can't afford a bank account, and they don't have a regular connection to a network, either because they don't have a phone or there is some problem, there's no network coverage. I'd like you to meet Lisa. Lisa Kambumbia, she farms maize and soybeans in deep rural Zambia. She keeps the cash from selling her produce at home. It's not really safe there, and sometimes it gets stolen. Because she's born in a village, she's never had any kind of formal identity document, so she can't open a bank account anyway. And because her income is under $2 a day, she can't really afford one. There's no mobile connectivity in Chinkankata, so mobile money isn't an option either. So at the end of last year, Paycode Zambia came to her village to implement our solution to solve the issues of identity, connectivity, and cost. And I'd like to show you how we did that. Firstly, we created a regulatory compliant functional identity for Lisa using her fingerprints, and we were able to issue her with a biometric smart card in under 5 minutes, right there in her village. Her card can be used for any financial transaction, just like a debit or credit card, which means Lisa can now access financial services offline in real time. In other markets, such as Mozambique, where 72% of our users are women, they can use their Paycode card to sell produce, receive payments for their goods. They can also do a range of other things, such as making payments for food, utilities, school fees, withdraw cash, send cash to other cards, receive wages, pensions, save money, apply for microloans. It's a long list of things that they can do. So now that the money's on her card, she has complete control over it. No one can steal her money, as her fingerprints are required to access it. If Lisa finds herself in a situation where she's being coerced to give her wallet funds to someone else, our smart technology enables her to place a pre-selected finger on the scanner when withdrawing money. And if used, this fingerprint alerts the system that the user is in distress and will display a fake low balance instead of the actual balance, enabling Lisa to always be in control of her money. Lisa's husband has a bicycle and he's able to get to town, but she knows that if she gives him money to buy things for the family, he might spend it differently. She has challenges getting to town as she has to look after her children and her elderly mother. She can't afford to be away from them for too long and the distance is too far to walk. Now that she has a Paycode card, she can do everything that she needs without leaving her village. We bring banking to the people by enabling financial institutions to serve customers they couldn't reach before. Paycode's technology can also help Lisa to save. She has a main wallet on her card for day-to-day purchases and a savings wallet for her children's school fees. If Lisa needs a loan, she can access one from the providers in the Paycode ecosystem. The system also stores data, so it's effective for other things like Lisa's pregnancy records, together with the health records of her children, are stored on the card. Financial inclusion should enable everyone to have access to services regardless of their income, their savings, or their location. Their lives should not be influenced by a lack of formal identity on affordability of banking and poor network coverage. Our gender intelligent design has facilitated financial inclusion for over 2.5 million women so far, and our solution can change the lives of millions more women, like Lisa, by delivering biometric digital identity and low-cost access to basic financial services. Thank you.
So how many transactions before these women start believing in this?
Yeah, so what typically happens is when the money comes on the card for the first time, they draw it all out and put it back under the mattress. And you know that we've tried, we do on the ground education, and that picture that was up there under the mango tree. We work with local companies. We appoint an agent, so we have local dialect and we have local understanding, and we try the best that we can to explain to people what it's like. But we found that there's no substitute for experience, and as Lisa demonstrated, you know, over time they become comfortable that it's the safest place for their money, and they leave it there. And we can see those balances growing when we look at the information reporting. You know, some of the projects that have been running for a number of years have now quite significant balances in them.
I heard you, thank you very much. I heard you say 75% women in Mozambique, but I didn't hear you reference the gender proportionality in the overall portfolio. Can you please share?
I'd say it's probably close to 50-50. It's slightly more women than men in our portfolio, but we're working on behalf of banks and institutions. So it's, you know, it's more their target of where they want to use the service. We do find that lots of our projects are targeted at women farmers like Lisa. So the banks themselves are making that gender decision.
I was really struck by your use of the phrase gender intelligent design. What was in the design that made it particularly?
I guess because of the biometric element of it and the fact that we actually go out into the community. So, you know, getting people to travel long distances to go to a bank and register for some sort of card is difficult to achieve. So we realized that the best way to do it was to issue those cards in real time in the community. And the biometric piece is a great leveler. We come across people that, you know, women feel uncomfortable about signing documents and doing all sorts of things. So the biometric seems to be a great leveler from that point of view, and they feel comfortable doing that.
Any safety measures on that biometric? If there's somebody who says, you know, by duress, hey, give me all your money, or the husband or the father, and then the woman doesn't.
Can anyone else access the money, you mean?
Yes.
No. So we do have the facility to put a second person on the card in another wallet. So some of the work that we're doing is social grant distribution for donors, and they want proof of life. So for something like a pension, they want to force the recipient to only have to come and verify that they're still alive on an irregular basis, but maybe a daughter or a wife is able to go and claim those funds on a regular basis. So we can have, you know, more than one person on the card, but there is the ability to have these various savings wallets. So you can have a savings wallet that's completely hidden if that's what you want to do.
Is it a wallet? Is it a digital wallet on the phone? When you say wallet,
it's a digital wallet on the card itself, which is key to us being able to do transactions offline. So the real money stays with our banking partner, and we create a digital representation of that money, which we move almost like a stable coin. Somebody explained it to me the other day. So it's a digital representation of the money that's in the account, and we put that in the wallet on the card. So when we do a transaction, we're taking money from the wallet on the card and temporarily storing it at the point of sale device, which means we don't need connectivity to make that transaction happen.
Oh, so it's internet free as such.
Sorry?
The internet free, you can just operate the
Sorry, I can't hear.
device. It's internet free.
It's internet free. So the point of sale devices need to settle once every 24 hours, typically. We have done projects where Those point of sale devices never go online, in which case we developed we call it a milking card. So it looks like an ordinary bank card, but it's got a larger memory on it. And it's somebody's job to go around and visit those point of sale devices in the villages and then cycle back into town and upload them. But typically there's enough connectivity to be able to settle those devices once every 24 hours, but not enough for it to be a reliable means of doing transactions.
How do you refill the card? How do you refill the card?
Okay, so there are two different ways of doing that. If the point of sale device, there's probably three ways. If the point of sale device is online, then when your card comes into the point of sale device, it recognizes that there's funds available. It's also possible to credit the card when it's offline. Now, what we do is we create a cryptographic block which contains the money that you're going to receive within that cryptographic block. And we take the first 10 digits of that block and we communicate it to the card holder. Now, that could be by text, it could be in a WhatsApp, it could be printed on a voucher. Or one example that I like to use because it explains a lot of the attributes of the system. We did a project in Malawi where we were paying teachers in remote locations and they were spending too much time traveling to get their salary rather than teaching children. So on the last Friday of the month, we'd publish the teacher's name together with their 10-digit code in the newspaper. So the teacher would go and find their name and their 10-digit code. They would go to the local shop in the village. They would put their card in and punch in their 10-digit code, which then unpacked that cryptographic block. And then all that's required is that they prove their identity for that money to be transferred into that wallet. Now, I can't take your code, even though your salary is greater than mine, because I can only get so far until I have to prove your identity. Because that identity is stored on the card, the system won't let that transaction happen.
How many times do you have to get a new card? What's the wear and tear on the card itself?
We've got cards that are 7, 8 years old, so they tend to be pretty resilient and people look after them. They probably look after them better than we look after our cards, so they're put somewhere safe when they get home. So they do last.
What about your team? Can you tell us more about the structure of the team and the diversity of the team and the ability to scale the team?
So we're South African based. We've got our senior leader is here with me today. Our chief operating officer is a lady. She controls everything from the data center based in South Africa. The sales team, I was having a debate with somebody yesterday about whether we should have more gender diversity on our sales team, but some of the places that we send people are not, they're not the easiest places to visit. So our sales team tend to be men. But other than that, we've got software developers. I'd say it's probably slightly more men than it is female at the moment.
How do you make money?
We make a transaction fee. So we like to share the risk with the users of the system and say, we're jointly encouraged to make sure that the system's operational and people are using it. Because the only way I make money out of the software is a clip of the transaction. So there might be multiple people involved in that transaction. That might be the people who are financing the cards. The banks are often encouraged to contribute to those costs because remember that the funds are actually sitting on the balance sheet of the bank. But other than that, there might be multiple parties who are taking a clip of every transaction, and the software deals with that and sends those funds to the appropriate account.
3 minutes left, judges.
What's the regulator perspective on your AML KYC compliance?
So we're a software provider to banks. So we're always working under the bank's license. So, my largest customer is the Central Bank of Ghana, for example. So they decide, we do sit down with the regulators because we're often dealing with people that don't have any identity documents, the sort of standard identity documents. And we do have to discuss that, this person is never going to have a passport and probably never going to have a birth certificate. So all we can do is prove that they're a unique individual within the database with those biometrics. And, faced with it isn't an option to do nothing, the regulators that we work with say, okay, well, we want to put some limits on the account so that it can't do lots of transactions, which is fine. But that's generally how we approach it. Our software to onboard customers, the card holders, is customizable and it's based on what the bank requires.
What's your cost for KYC?
What's our cost for KYC?
Cost per KYC, your unit economics.
So, we're onboarding, it takes about 5 minutes to onboard a client. Every project is different because we're onboarding, in remote locations. We did a project in Zambia last year, the Farmer Input Support Program, and our teams had to travel upriver in order to onboard farmers in their location. But it's typically around $5 per card is what our onboarding costs are. Thank you.
How do you manage your agents? So you mentioned earlier around you have agents in lots of different locations and they have quite a bit of responsibility, but how do you manage those agents to ensure that they retain your values and are doing the right thing?
Yeah, so we've had conferences in the past where we've got people together, get our agents together to sort of do training. We utilize a lot of Zoom these days, obviously, like everybody else, and we get together with people at our agencies. And there are people on my team that are dedicated to being those on the ground responsible people. I've got a team in DRC this week because we've started a new project with the Motor Taxi Association. So I've got some technical people there and I've got some commercial people there, and they're training the agents to do the onboarding. The software is pretty intuitive, and our usual method is to train local students to do that onboarding process, and they can do that in 5 minutes, 5 to 7 minutes for each customer.
Are you
Thank you very much. I think we are out of time. I got the stop from Lily. So 13 minutes are up.
Get under the wire just with this one?
Okay.
Okay. Is the solution compatible with national ID? You mentioned your biometric ID. There are also national ID schemes, and how do you navigate that?
Yeah, so we can integrate, if there's another source of truth, then we can integrate that and we can interrogate it. So we're about to start a project in Nigeria for Kwara State. And what we've agreed with them is we're going to interrogate the NIMSI database. And if this person that we're onboarding doesn't have a NIMSI number, we're allowed to issue them with a number and pass that information back to NIMSI. So it's full, API compatible, and we can go out and talk to whatever source of truth the bank wants us to talk to.
Thank you very much, Gabe.
Thank you.
Give him a round of applause. And now I'm calling our fourth and final finalist. Pia Bahadur is the co-founder and CEO of Mirabills, which is a female-founded, free-to-use, gender-intelligent app designed to serve business management needs of women micro-entrepreneurs by providing software as a service for social impact. Mirabills works on a capacity-building-led model of deployment that creates credible digital financial footprint and responsible ecosystem linkages, that's a lot of words, for underserved women who are often first-time users of technology. Please welcome Pia Bahadur. Functions for your pitch, 13 minutes for the judges. Good luck.
Yes. Thank you. So Mirabills came out of the motorcycle ride where I met a lot of small business owners along the highways of India and Southeast Asia. The one thing that did come out for me was that many of them were having a hard time managing their business. Many businesses would fail and shut down. And when I came back, I realized that those numbers have been accounted for, and everybody's aware that indeed businesses fail. Sorry, where's the clicker?
Oh, you need the clicker? That's it, yes.
Okay. So the other, so that by large businesses have, you know, ERPs and CRMs to help them do decision making, very small businesses don't. But these small businesses also need this kind of answers, like what are my biggest expenses, what is my best selling product, how much revenue did I make last month, and there seem to be no answers for them to find easily other than maybe keeping something on paper. Additional to this, of course, are the, you know, equity challenges and the systemic challenges that women face across the world, and additional to that is the idea of running a business and having absolutely no support. So we decided to, you know, build something that is really easy for her to use, which would be able to help her enter transactions in a very easy manner in her language. Mera Bills is available in 10 Indian languages, which gives her some level of business insight. What is my profit this month? You know, who owes me money? Can I send payment reminders to people? Can I make a catalog and share it on WhatsApp? Really simple things. And it's free, it's training led. What we realized is that it's not like women are going to go out there and download it from the Play Store. They need help to access and find this. And it is, and they will need some support as they go along this journey of becoming digital. But that, you know, so what we realized, the USP for Mera Bills is that we start with creating a simple app for the lady. We get her customized support by working with trainers on the field, which who are coming from NGOs that we work with organizations, with government we work with, and as we went along, we realized that even these partners needed some support in terms of implementation, in terms of managing training, in terms of managing their field staff, and we started creating that, looking at, you know, the usage. And then of course when we bring all this data together, it would be able to have, you know, interventions at scale to make decisions for larger organizations to look at how the cohort is doing and so on. What we managed to do with Mera Bills is create a digital footprint for someone who up to now was not using anything digital, simply because she was not finding any value for using a digital tool. I mean, she's using WhatsApp and she's using YouTube, but here is something that helps her with her business, and suddenly she's eager to use it. But what that does is now we have, you know, usage patterns, her business health, if she's willing to share it. By the way, this is based on data privacy, what her capital requirements might be, and if she is ready to engage with hyper-local markets. And that allows other partners in the ecosystem to now, you know, to bring her services, which up till now, they had no way of knowing she needs. So it allows the government, it allows social sector partners, it allows markets to now, you know, find her through the virtual world. So essentially, what we are looking at is enabling access, and the way we plan to scale is by, you know, surfacing all this data to a certain point and then opening it up for interpretation by whoever the ecosystem partner wants to use it for whatever purpose. So that's, you know, that's where we're looking at it. And of course, the numbers are really large. We are looking at, you know, 23 million TAM in India alone. But the Mera Bills vision ultimately is not to, you know, is to create these centers of power in rural India. I mean, I have ISB. I mean, we are incubated by ISB, the Indian School of Business. I work with IIM Bangalore very closely, and I have all kinds of mentoring. But to create these places in rural India seems to be something that we must be looking at more closely. So the assisted model starts at, you know, helping her manage and helping her grow her business, able to access credit, access markets digitally, be able to hire and employ people in rural India, and ultimately become mentors and role models and create more entrepreneurs around themselves, so that they're able to, since they've gone through the journey, they can inform other women around how this can be done. So that's, and that again, the vision is that this scales fairly emphatically. So thank you.
Source of revenue if the app itself is
Yes.
free?
Currently, it is as we provide the back-end dashboards and training. So just in the last year, we did close to $100,000 worth of business. So we are
With whom? I'm not understanding.
so these are partners in the ecosystem. For example, the government, we've been paid by the World Bank, by Seva Bharat, and several other NGOs and social agencies.
Contributions. What's the profitability mark?
The contribution, I mean, as in we provide the service. The app itself is free for the user. So the service being provided is training and the dashboards for managing the project over 3 to 6 months or a year, depending on what they want to do. Did I get your question?
So how do you make money? How does Maribel make money?
This is revenue for Mera bills. We are paid for providing the service.
Yeah. Okay.
You see that changing over time. So it's really good that you have these contributions or revenues coming in for the service. But how do you see that that model evolving?
Yes.
And unless you see it based on contributions going forward.
No, we look at the next 2 years as this would be the primary source of revenue. But certainly after that, once we reach a certain scale and a certain amount of number of users, that there would be, the lending, of course, the credit arm would, lenders are looking, we are already speaking to them, and they would be hopeful that we would be able to bring them new users, people who are new to first time borrowers, and so on, and that would be a source of revenue as well. Also, we are seeing market play in terms of there are organizations which handle close to 6,000 enterprises across places because they're aggregating materials, inventory, and they want to manage these across rural India. And one way of doing that is we create the kind of extended ERP for them.
Got you. So you build the scale,
yes,
and then you can start to monetize on top. And what would you say is the tipping point for that then? And how many users? I know you showed a slide earlier. How many users do you currently have? And what do you see as the tipping point to be able to then start to monetize that a little bit more?
So at this point, we are operationally viable, but that's because we've got a tiny team and a tech co-founder. But I think we are looking at about 50,000 this year, but we are hoping to grow to about 2 lakh users in the next year and a half. So that would be the tipping point, because we are also building out a lot of the tech stack, which will help do training better. And we are obviously going to move to not such a closely handheld training mechanism, but much that will go online, and that will be more peer learning and based out of group learning kind of situations, which will be more driven in-app, voice-enabled kind of situation, which will then be able to scale far more easily than we are doing right now.
Got you. Thank you. And yeah, I love the concept, and congratulations.
Thank you.
If your target market is underserved women entrepreneurs, how do they discover you? How do they discover Megabits?
Yes, so right now it is largely we going to them through these partners on the field who have community resource people in every community. But the idea is to seed enough communities where they then tell a bunch of people. So what we are seeing is like we've trained about 18,000 people until few months ago, but there are about 35,000 downloads, which means somebody is telling somebody, and that's to us the greatest referral. In fact, that's what's pushing the self-learning module very quickly, because we need to get out there and have them be able to download and tell each other. And but by the way, in rural India, that's one of the, it moves very quickly, word of mouth.
Thank you.
Any more questions, judges? No? All right.
Thank you
very much. Thank you very much. So thank you to our 4th finalist. What's going to happen now is that our 6 judges will retire to deliberate, and we'll be back here at 5:30 to announce the winner of the FinTech Challenge. Good luck to everybody.
So I need to say a few more thank yous, very heartfelt thank yous, to the leading sponsor, the Bill and Melinda Gates Foundation, and scaling sponsor, Ernst & Young, and supporting sponsor, the United Nations Center Capital Development Fund, for their support of the FinTech Challenge itself. I'd also like to thank the Miller Center for Social Entrepreneurship's Accelerator at Santa Clara University and Elevandi for providing valuable prizes to this year's winners. Thank you for your commitment to inclusive fintech. Our gratitude also extends to the employees from Credit Suisse and the United Nations Capital Development Fund who mentored our finalists over the past several weeks and helped them prepare for today's pitch session. So this was really, really hard. All of the judges were tremendously impressed by all 4 finalists. In the case of GajiGesa, the judges really liked that the company was directly taking head on the idea of predatory lending with a particular emphasis on serving women workers. With India P2P, they felt as a platform business, there was tremendous scaling potential with a really attractive financial profile. With Paycode, we saw great potential for transnational impact, solving critical problems of identity and last mile payments. And with Mirabills, this company is sowing the seeds for a business with tremendous, maybe even game-changing potential for impact at scale. So, the moment you've all been waiting for. Can I have a drum roll? The winners of the 2023 Women's World Banking Fintech Innovation Challenge, and yes, I did say winners, are India P2P and Paycode.